Welcome back, ladies and gentlemen. We have a very interesting fireside chat titled Investing in Inclusive Fintech Startups in the COVID-19 Era. And this session will be chaired and moderated by Syed Mushir Ahmed, founding board member, Fintech Association of Hong Kong, and founder, Fintech Asia. And he will engage with Vikas Raj, MD, Axion Venture Lab. Mr. Ahmed, over to you.
Good afternoon, everyone, and welcome to the Economic Times Summit, talking about digital lending and innovation. With me today is Mr. Vikas Raj, who is with the Axion Venture Partners. My name is Mushir Ahmed. I'm co-founder of the Fintech Association of Hong Kong and managing director and founder of Fintech Asia. Welcome, Vikas. How are you doing today?
I'm doing great. It's nighttime. It's 9 o'clock here in the U.S., but things are going great. Thank you very much for having us, Mushir.
Vikas, how about a quick introduction to what you guys are doing and your focus in the space?
Yes. So Venture Lab is a global seed stage venture fund that invests in and supports startups around the world that are using new technology, new business models to expand access to, improve the quality of, and improve the affordability of financial services for the underserved. So we're an active investor in India. We have been since 2013, have invested across financial services startups, including companies like iFinance, Credit Monthly, SME Corner, Toffee Insurance. And our thesis is ultimately that digital penetration has outgrown financial services penetration. And that's true in many markets around the world. And we want to support the innovators who are using digital and the access and data that it creates to finally serve the 3 billion consumers, the hundreds of millions of small businesses around the world who have been historically considered too expensive to serve by the financial system. And as we're going to talk about, that thesis is more relevant now than ever.
Right. So, when you're talking about the thesis about digital inclusion and penetration, we've also seen that with COVID-19 having a devastating effect on quite a few people, right? Especially on the lower end of the economy. In many places, we've seen cases where a lot of people had to move from their places of work back home, right? Or losing access to funding, etc. So in this environment, how are you seeing the impact of COVID on inclusive fintech startups, right? And the population they aim to serve, how are they faring?
Well, the impact, in a word, has been dramatic or earth-shattering, like nothing we've ever seen before. If you think back to mid-March, which is when the U.S. went into lockdowns, and much of the world went into lockdowns, like many venture funds around the world, we sort of started first by ensuring our own staff were safe, integrated into our work, and then we moved right into taking stock of our portfolio. We've invested in 47 businesses around the world since we started, and I think the first responses of inclusive fintech startups and the economic, the first sort of responses to COVID and the economic sort of crisis that came after was survive, and then we will figure out how to thrive. It was really the most dramatic disruption to their businesses these companies had ever seen. Dramatic revenue drops around 55% on average for the companies across our portfolio. That really required very quickly figuring out how to manage teams remotely, how to cut costs dramatically, stay nimble. Usually meant cutting staff, almost universally meant cutting staff. And I don't want to underappreciate how very hard that is to do for companies management as people, particularly in this moment, and we've tried to be very, very aware of that. Beyond that, companies that were raising money or looking towards some sort of liquidity event around the time that the shutdown started, that was a special sort of challenge, at least in the immediate response to the shutdowns. On average, our companies are raising money every 18 to 24 months. So you sort of, that means 50% of our portfolio is raising money every 9 months. So any of those companies that happen to be raising money in the 9 months after shutdowns really required dramatic changes to ensure that they had runway to get through this crisis. They were some of them leaned on existing investors to support them, which we have also done. And that this has been especially hard for lenders, and that's sort of the subject of this conference, because many of them had spent, years, decades building books that all of a sudden sort of fundamentally changed. Their ability to collect, the sort of fundamental underlying portfolio quality very quickly became a huge issue. I would say we actually don't even know the reality yet across lenders in India. There's that Warren Buffett line, only when the tide goes out do you see who was actually naked the whole time. And I think the tide hasn't even gone out yet. In terms of lending in India. It's hard to know exactly how lenders are doing given the moratoria. I think we'll have a much better sense at the end of this year how strong balance sheets really are. The trends and repayments have broadly been moving in the right direction, but I think we have seen clearly that many fintech lenders really didn't understand how hard this would be. They sort of thought of credit as one part of a value set when it's really a fundamentally different sort of business. It's sort of deadly hard, and small defaults can have a massive implication on a business, and I think we're going to see that happen. I guess on the positive side, we do think that companies, and I think this is true for some of the companies in our portfolio, companies that sort of were conservative enough, responsible enough in the run-up to the crisis, are really seeing an opportunity to innovate in this moment. And I know we'll talk a little bit more about what we're sort of excited about, but we're really seeing our companies activate their digital capabilities in onboarding. Yes, we have companies that are doing all of their sourcing and onboarding via WhatsApp. They're focusing much more on digital marketing. So we've sort of seen a move from physical businesses that have tech components to sort of tech businesses that have some physical components as necessary for things like collections and ID verification and things like that. That's been an area that we've seen our companies really move toward becoming sort of pure tech businesses, or as much as they can, which we think will lead to long-term opportunity, long-term growth. We don't know yet what this is going to mean, I think, for fintech lenders, but we have a lot of confidence in companies that are sort of proactively evolving to meet the moment.
Right. So when we are looking at this, there's just two sides to it, as you rightly said. When the lockdowns hit and COVID's impact became severe, cash flows dropped, incomes dropped, right? And access to liquidity for a lot of people was difficult, right? Banks were pausing their, even if there's a moratorium, it was just about, for the end customer rather than the NBFCs or fintechs as well. Now, as we move ahead, we've also seen, green shoots in parts of fintech and even in lending where people have started showing some strong performances because of better management, etc. But where do you see as an investor the opportunities lying? In twofold question. One would be from an investment perspective, where would you look at an opportunity in what kind of startups beyond your current portfolio, right? And secondly is for the startups themselves, the inclusive startups, where can they find this opportunity to grow?
That's a good question. Yeah, my view, I sort of touched on this before, is there's a lot to be optimistic about. And I say that very carefully, knowing that, as you said, how difficult this pandemic has been for so many around the world, particularly the financially vulnerable. I think amid a global pandemic, the worst economic downturn of our lifetimes, there is a sort of urgency to move to digital, particularly small business, micro business, digital transformation efforts. And so it's no longer something that's sort of nice to have. It's sort of an imperative for small businesses. And with that comes a whole host of new data, new access points. As our lives become more digital opportunities arise. And I think that's particularly obvious for small businesses who can become more efficient and ultimately be served with better, more relevant products once they come online. So that thesis sort of underlies much of what we're excited about globally and in India right now. So I'll give you an example. We're really excited about something we've been calling platform fintechs. That sort of platforms that are solving core, hard, historically offline problems for small businesses like delivery, like distribution for certain supply chains, and then looking to offer financial services as a value add over time. So using transaction data and access to to get clearer visibility on the businesses of these small businesses. We're really excited about that in the agri-value chain, in the sort of food and beverage space. Those are sort of fundamentally still very messy value chains. They need to be digitized, particularly in this moment. And then there's a lot of opportunity to provide services on top of that. So sort of embedded finance models that lean on digitizing small businesses. I think that goes for consumer sets too. You know, we're really excited about education finance more than we have been in some time, because there's really an opportunity now to figure out new models around educating remotely and affordably, and thinking through novel ways to get paid and to finance schools in this sort of remote and digital world. So those are some of the places we're sort of excited. You asked the second question, which is a good one, which is sort of how should companies even be thinking about approaching investors in this moment? Is the capital out there? Because it's the whole game has sort of changed, right? We're not going out and having coffees 5 times a day with companies. The approach is fundamentally different now. I think I would break that into 2 parts. There's the fact that it is virtual now.
Yeah.
And venture funds like ours have had to move to virtual like everybody else. That means processes are different. You need other ways as an entrepreneur to sort of explain your vision, explain your team strength, explain your traction. We're actually going to be putting a guide out about this very soon. So the listeners viewers can just Google this soon. But you know, you can expect investors to want to spend a lot of time with you on video. Yeah. Not just with the CEO, with the rest of the team, to check team strength. But also to get a sense of the relationships between team members. We're so accustomed to be able to go to an office and watch the CEO interact with the CFO and interact with the head of treasury and all that kind of stuff. It's hard to replicate on Zoom. So we've tried to come up with ways to really watch entire groups, entire teams interact online. I think one thing that's certainly going to happen is venture investors, particularly investors like us that are global, we're really going to be leaning on the other investor relationships we know in the space. So I would recommend that entrepreneurs really don't lose sight of the importance of sort of investor networks, even if they're not necessarily investors in your deals. And then I think part of this is also contextual. I mean, beyond sort of due diligence, I think entrepreneurs need to be really proactive about presenting themselves as aware of COVID and optimizing for COVID during this time. I think there's a sort of natural people want to ignore it and say, hey, we still have a great company, but I actually think you need to embrace it. You need to show how your company has a better ability to provide services in this time versus alternatives. You know, the best pipeline companies right now are getting VCs excited by focusing on why their business is more relevant than ever. Okay. I think that sort of positioning is critical because nobody is unaware of this moment, and you need to talk to it actively.
Right. So as we come towards the end of this fireside chat, as it were, what would be your one advice to fintech startups in the digital lending space who are looking at coming to investors, right? And we've spoken about quite a few things earlier, but what would be the one main thing that stands out to you that is critical for businesses as they approach investors in these tough times?
I think it's really this is really the time for these businesses. This is their time to shine. These companies that were using new data, artificial intelligence, new engagement strategies to serve underserved customers, in a world where credit scores have limited meaning, in a world of moratorium, all of this work becomes that much more compelling. In a world which is digital and remote, all of this work becomes that much more compelling. I really think this is the moment for inclusive fintech startups to sort of that are getting newfound attention to sort of hold the flag and become the new set of leaders in financial services and financial inclusion.
Great, Vikas. It's been a pleasure talking to you. I know we are 12 hours apart and we have India right in the middle as the session goes out. So on behalf of Economic Times as well as the audience, I'd like to thank you for your wonderful insights. And we look forward to the report that's going to come out from Axiom Partners very soon. Right? So
thank you so much, Mushir, for having us. It was great to talk to you.
Thank you, everyone. Thank you.
Bye. Bye-bye.
Bye.